Now listen and listen good. So there is this discussion that we started. We have been looking at these factors you have to consider before you choose an appropriate accounting system to use in your business. Now, this is a very critical discussion that I would want us to look at it critically, step by step, by looking at those critical areas to consider. Now, you know, I know, and we all know that there are lots of accounting systems that vendors are selling out there. Most of us, we've interacted with a lot of systems with very many different names. But as I mentioned before in our previous discussion, I reiterated that the name of an accounting system really does not matter. The most important thing is to look at the functionality and how best it handles your specific industry specific processes and your needs as a business person. And if you find yourself as an accountant in a business setup, as the manager who is responsible to manage a business on behalf of the owners, you are sitting at the decision making table and you are presented with information about the choice of a software that you want to buy. This one, I want to give you insights on what to look at. You do not just look at the name, maybe how common is the name of that accounting system. There are those common ones that we already know. There are those common ones that we know. But then before you get there, there are a lot of factors involved. Look at the functionality and how best it helps to solve your problem. Now, I want us to go bit by bit. I know this is a very wide discussion, but I want to go to the specifics, looking at the accountability part, because the essence of all the discussions that we're having here is accountability. And I'm basing my discussions on the simple fact that you are an investor. And as an investor, I challenge you by asking, what is your interest as an investor? And as I had mentioned in the previous discussions that we had, that an investor only has two interests. One is to maximize profits. And this interest, which is to maximize profits, it is tied onto another, which is minimizing of costs. That is the interest of an investor. As an investor, as a business person, you are looking at your returns. Now, as you look at your returns, it means your cost is very critical. Now, when we talk of an accounting system, and we know very well, for you to maximize your profits as an investor, as a business person, you must have peace of mind. Whenever you are seated somewhere, you know very well that you've invested your money, whether you've secured a loan or you've sacrificed your savings so that you start up a venture, an investment, a business in this case. Now, when you start that business, you might be running it yourself and you might be pretty comfortable that in financial terms, you are handling the finances in that business. But my question to you is, for how long are you going to handle finances of that your business? At one point or the other, you might fall sick. You might be working, you might be employed yourself at the same time you are running a business. Will you be there all the time? The answer is no. Will you be able to oversee all the financial operations of that business? It might not be very easy in practical sense. You know why? Because you will not be everywhere. You will not perform all the tasks yourself. You will have to entrust people, individuals, some known to you, some of whom are not known to you. You will employ them to work in your business. You will entrust them to handle your finances, to handle your investment. You remember, this is your money you've put in there. Now, this is the essence of having an accounting system in place. An accounting system is where whoever you've entrusted with managing your investment, you must be able to look at the accountability side of it. You trust them with your resources, but then you need to have a proof. You need to be sure that you are not losing money. Your investment returns are not being squandered by anybody. No one is taking advantage of your absence in that business to misuse your resources. And again, you are not just running a business without having a direction. Your decision making must be informed. As a business person, for you to make informed decisions, you need to have your financials in order. You must have your financials in good order so that whenever you are making decisions out of it, the decisions are well informed and well supported with evidence and data from past transactions. And whenever you are you are looking at possibilities of expansion, you already have an insight, you already have a forecast information given the previous data that you already have. Now, if we look at this thing in that broader perspective, then we are going to appreciate, ladies and gentlemen, we are going to appreciate the essence of all these discussions we are having. We'll appreciate that accountability is key. If you are an entrepreneur, you're a business person in this meeting and you are listening to this, you'll agree with me that accountability is the reason why you are starting that business. You will not be there always in that business. You will entrust people to work for you. And when you choose the right accounting system in place, and when you talk about the right accounting system, there is something that clicks in my mind, and it is putting in place the correct internal control systems, the mechanisms to make sure that the processes within that your business setup are well aligned in a way that it is, you can be able to tell and see if there is any breach anywhere across the system, you are able to tell. Now, this is another separate discussion altogether. It is about business process re-engineering. That one is a different discussion about the internal controls. This is about audit of your business internal controls, to give them a test, to test your controls. How sustainable are they to manipulation? In terms of financials, in terms of accountability, you must be able to have these tests in place. You must ask yourself at any given point in time as an investor, you are seated somewhere in your house and some people are running your business. You ask yourself, how foolproof, how sustainable, and what are the firewall measures? What are the restrictive measures that are put in place in my business to ensure that I'm not losing money? Because as an investor, remember, your goal is the returns. Maximize your returns and minimize your costs as much as possible. So now, with that view, I want you to hold it there. I want you to just hold it there. Do not let it go. Just hold that discussion from where we've started it and we continue. I want you to connect it with the direction I want us to take at this point. Now, we've talked about the relationship between an accounting system and tax compliance. And I've brought in the cost aspect of it. So I want you to just hold into that thought, in that terrain that you are thinking as a business person. And I want you to connect it with this reality. And I believe at the end of the day, you're going to appreciate what we are talking about here. You're going to appreciate the importance of discussing about these accounting systems. Now, we've talked about taxes. We've talked about these accounting softwares and whatever you consider in all that. We've talked about tax avoidance, tax evasion. Now, we started this discussion about what do you consider before you choose an appropriate accounting system. Now, as much as we are talking about before you choose, you might have already, might have an accounting system in place, but I want you to run a test on it. I want you to look at this discussion as you try to test it. Test the system that you already have in place. If you're an accountant, you are a manager running any business, as you look at these discussions, you may have systems in place, but are you looking at it? Give it a test. Is it having all these considerations in place? Maybe, just maybe, it might be useful in the future if you would find yourself in a situation where you need to make a decision on either migrating to a whole new system or upgrading the system that you already have to improve your accountability, reporting, and decision making. Remember, those are very important things. For you to go concern, Your business might be doing well now at the moment, but are you looking at the near future? Are you looking at the future of your business? Are you looking at the possibilities of expansion? Is your system ready to accommodate the expansion that is happening? Look at the flexibility of your system. Is it able to accommodate the new changes in accounting policies? Is it able to accommodate the regulations, the tax regulations that are coming up every day? Is it flexible enough to handle that? As you increase the number of employees, is your system able to accommodate the number of users that you need? What is the flexibility level? With the advancement in technology, is your system efficient to run on? Those are some of the factors we are discussing here. If you already have in place, I want you to test it. If you don't have it in place, you have a point to start thinking. Now, we talked about general functionality as factor number one to consider. There, I challenged you to ask yourself, what type of functionalities are you looking at as a business person? I only gave few examples. There are so many, but I only gave a few. In terms of questions, you can look at that. The first one was LPO. This was to ask you, to challenge you. Will you need to raise purchase orders in your business, the business that you're running? Depending on the industry, will you at one point be need to raise purchase orders? And these purchase orders will need approvals. There are some processes, procedures, internal control procedures where there is one user raising the LPO, and basically the LPO emanates from a department when they give a requisition. What is the process of that LPO processing? Where does the requisition start from? How is the channel to the user who is raising the LPO? What informs the cost estimations in that LPO? How is your system picking up these costs? How does your system work with average pricing, where price fluctuations are imminent? Remember, we're in a market where price fluctuations, you cannot run away from it. It is always there. Because of so many other financial factors, all those fluctuations are there. Will it be able to accommodate LPO management, and you will have a track record of all that? Another element of functionality which you mentioned was raw materials. Are you in a business where you're working with raw materials? Raw materials, do not overthink about raw materials. I know when I mention about raw materials, somebody's already thinking of a very big manufacturing company. That is not the case. You know, even if you're running a restaurant, when you prepare food, whatever food item you are preparing, those ingredients that you use, those are raw materials, because you use them to make a final product. You add value to the raw materials, put them together in a given matrix, in a given procedure, using given proportions to come up with the final product. All these elements that you are using, the raw materials, you need to account for them. So if your business needs such type of an accountability, then you need to think wider before you start thinking of a software or a system that can work for you. I also talked about finished products. If you're running a business where you are putting raw materials together to come up with a product, then at the end of the day, you need to keep track of the records. You need to keep track of the finished products also. You are keeping track of raw materials. At the same time, you are keeping track of the final products. What is involved in between here? How efficient will the system manage all this so that you get reports, you get to be confident and sure that you are not losing money, and you can oversee at a glance or at the tap of a button, you are able to see all that which is happening in the background. Will you at one point have to see the GRNs, the goods received notes? And there is something I mentioned when I mentioned GRN. I didn't write it here, but it comes to mind when I mentioned GRN. What is it? Now, when I mentioned GRN, something comes to mind. I talked about credit notes. I talked about credit notes and debit notes. Credit notes and debit notes. Now, when I talk about GRN, you've received these goods that you ordered from the LPO processing, depending on the internal control mechanism of processing this order from the requisition to the point at which the supplier is bringing this good or items to your business. What happens when you have some goods supplied to you? They do not meet your standards, maybe in terms of quality, in terms of quantity, or You are supplied the wrong product. You're supposed to return. How is your system handling that process? Raising of credit notes and debit notes. It happens both ways. Maybe at the point of sale, you've already sold an item, but it is rejected by your customer. What happens? How do you treat it in your accounting system? Is your system accommodative of such a process? Is your system ready to accommodate such? You've already sold it. And remember, at the point of selling, you already recorded recorded it as a sale. And in fact, I'm opening a Pandora box. I'm opening something new, which I'm just mentioning so that you think on your end. Whether you have this system in place, I want you to test it. Think about this line as you test it. Ask yourself, is your system doing all this for you? And what is the essence? At the end of the day, what are we looking at? I started a discussion to you guys about the objective of an investment and the relationship it has with all these accounting system functionalities that we're talking about. Now, I was talking about credit notes and debit notes. Now, something comes to my mind. And because we are talking about relationship between an accounting system and tax compliance, I challenge you to test that system you're using right now. Whether you're an accountant, a manager, you are a supervisor, you are an entrepreneur yourself, you are a boss, you are a CEO or something. Just ask yourself and go test it on your own. If there are goods that have been supplied and you've rejected, wrong goods, maybe they are spoiled, maybe they do not meet your standards in terms of the product that you ordered, or maybe they've been supplied in excess. Yeah. And when it was supplied in excess, you already received it in your system. Only after receiving, you realize that we did not require all this much. So we have to return some of the goods. Now, remember, there is tax implication. In fact, let me write this in red because I want you to look at the bigger picture. You know, the essence of all this discussion is just to challenge you and to look at the bigger picture. And I want you to look at the tax aspect. How does your system handle credit notes in terms of tax? And how does your system handle debit note in terms of tax? Because remember, when goods are returned by your customers when you sell to them, yeah, when you sell to your customer and they return these goods to you, what happens? What happens in your system? You already recorded them as sales, yeah, and as you've recorded them as sale, you've already captured the sales tax on it. From your system, it has already been captured. The sales tax is already charged. Now, what document do you give whenever goods are returned to you by your customer? Yeah. Now, what is a credit note? That is what we challenge ourselves to ask. Yeah. Now, a credit note is a document that you send to this customer to correct a mistake on an order or an invoice. Remember, you either refund for the product or the service that you've offered, or you will exchange this item for your customer. Yeah, for your customer. Now, when you exchange this item for your customer, how does your system able to play around with the functionality? Normally, it is called void. The void functionality. How does it work in your system? And what is the overall effect on tax, which was already captured, and again on the sales revenue that was already captured in that system? Does it have a cancelling out effect so that whenever you void an item, it already communicates to the tax aspect that was already computed, and at the same time, it reflects on your sales. And you can void and refund that your customer who has returned the goods, or you can void and exchange the item. Either exchange the service or exchange the good, depending on what you are dealing with. Now, how does your system function to cancel out and to handle the accountability aspect of it in terms of financials, so that it does not overcast? Remember, when you sell and the goods are returned to you, At that point in time, your sales are overcasted. Overcasted simply means they're overstated. Your sales are not real. There is a fake element in your sales. Your system recorded this as a sale and revenue is growing, but actually you do not have that money. That sale was already cancelled. Now, check how your system treats all this. Again, or in terms of refund and exchange, what effect how do they handle the tax part of it? The tax part of it. So I want you to test if you have, if you already have a system in place, you need to look at it and see how accountability part of it plays out. And again, in terms of taxes, so that you avoid being overtaxed. Yeah? You avoid being overtaxed. You have to make sure you see that your system is really helping you and working for you. Yeah? So, credit note is issued by you to that your customer to correct that overcharge. And you can correct it by either refund or exchange. Now, what happens now on the debit note? Debit note now comes in when you buy your raw materials or you buy your goods. If you are dealing with buying and selling, you buy your goods, you're supplied with the items, but then you reject some of them. You've already generated your GRN, your goods received note from your system. And at this point in time, depending on the inventory management system you're using, they will handle it in various ways. So, whenever you reject some of these goods and they're returned to your supplier, there is a debit note that you are supposed to keep documented. And you will give your supplier, the person who has supplied to you these products, you will give them a debit note. Yeah? And this one is just supposed to correct an undercharge. You get that? So we have to look at this in terms of, I'm trying to make sure that you understand how these documents work. In practical sense, remember, as much as we've always talked about these documents, in theory, you need to really look at the practical part of it. When do you issue it? And how does it function? Yeah? So, how test your system and see how your system will handle this type of transactions. Now, having mentioned about the GRNs, the returns in terms of the sales returns and purchases returns, yeah, then, and remember, the easiest way to understand the difference between credit note and debit note is that a debit note is issued before you make any payment. But a credit note is issued after payment. You issue credit note to your customer who has purchased to you to correct an overcharge because they've returned those goods to you. And there are two ways to correct that overcharge. You can either opt to refund them or to exchange for them the goods that they're not satisfied with. And then a debit note is issued before you make a payment. Yeah? And as the purchaser, if you buy these goods and you've rejected some of them, you are returning some of these goods to your customer. Yeah? Then you issue to the person who has sold to you this debit note so that you correct, so that they charge you, they give you the correct invoice depicting the only amount, depicting only the amount of goods that you've actually received and accepted. Now, how does your system reflect that change? GRN was already received. You already received the goods in your system. Does your system really recognize the tax aspect and the implication on the input VAT? Remember, your input VAT has to be in conformation and it has to be correct for you to claim it successfully from the taxman. And tax being a cost on business, it is a critical aspect. You have to look at it. You don't just assume. Don't assume. So I'm challenging you to look at them. And if you want to make a choice to engage or maybe get on board an accounting system, these are critical things you have to look at, my friends. You cannot assume. If you're already running a system, these are critical questions that you need to ask yourself. Test your system, test it and see, how does it handle all this? How does it handle all this? When an order is rejected, when you've also rejected some supplies which you already received in your system, when you receive an invoice, and when your sales is overcasted, your sales are in excess, and you are looking at your sales at the end of the month. Hey, now this is applicable to business people. Now, if you already have a system in place, you realize that at some point you are even confused. You are looking at your sales report from the system that system is giving you, and then you realize there is a very big variance. You ask yourself, now, this my system is saying that I've made 3 million. But when you look at your bank account, you're not seeing money. The balance you're seeing in your bank is not reflecting 3 million. From your simple computations, you ask yourself, maybe you are the one who normally pays for the purchases, right? You pay because you are the owner of the business, and because financials are always very sensitive, you don't want somebody to be engaged in paying the monies. So you pay it yourself. Whoever you've tasked to run your business is just giving you a phone call and telling you, we've taken these goods from this supplier. Please pay them. The invoice is here. And the invoice is, for example, 100K. You make sure you pay as the owner. You pay it yourself. So in other words, you are sure you are the one doing these transactions involving your money, payments. But at the end of the month, you put together all the payments you've done and you ask yourself, all the invoices I've settled is amounting to 1.5 million. All the expenses and the costs, the wages, the utility bills I've paid for is worth, for example, 500,000. I've paid salaries, I've paid all the statutories, I've paid all the other utility bills worth to 500. And all the invoices are settled during the month is 1.5 million. You look at the sales figure from your system, from the reports you're able to get from the system, you see system is telling you you made a sales of 3 million. But the challenge you have is you're looking at your bank balance and you're not seeing money. You ask yourself, I'm expecting to see 1 million in my account. Where is the money? You don't understand, right? That is the dilemma business people find themselves in because of some of these critical matters we're discussing. Some of your sales might have been overcasted over time. When orders are cancelled, when there is some voiding happening, when you receive wrong invoice amounts and the system is not able to reconcile properly, when tax computations happen on these cancellations and then the system is not able to reflect the accountability reductions and adjustments properly, and you are not able to detect because maybe the bookkeeper or the accountant you have in your premise is not able to look at the back end operations of these transactions and their implication, you are not able to detect some of these adjustments. At the end of the day, you realize your books are not, you are not really convinced that your reports are correct. So you are always there trying to struggle to understand why your system is not clean, it's not giving you correct records. Now, these are some of the areas where you need to look at. It will answer all those your dilemma questions that you have. Now, that is factor number one about considerations before choosing an accounting system or to see the functionality of your accounting system. That was about general functionality only. This is interesting. We've just discussed general functionality. I've just mentioned a few items. There are a lot of things involved, but I've mentioned a few. I hope you are getting the trajectory. I hope this is being helpful to you. Now, the next item, we talked about industry-specific functionalities. And this is very basic. I hope you understand that point. This is about the industry where you're working. You might be running a consultancy firm. You might be running a clinic. You might be running a restaurant. You might be running, a cloth. You are maybe doing tailoring. And you're basically offering any service. You're running a shop. You're running a salon, a spa, a massage parlor. You're running a hotel or anything else. Depending on your industry, before you choose an accounting or a business management system to put in place, you have to consider your needs in that industry. What functionalities are you looking at? What is the suitability of the system? Remember, when you approach these people selling these business systems, they will not tell you that their system is not fit for your industry. They will not do that. You will ask yourself, before you approach them. Because remember, you often meet salespeople, the people who are selling these systems. Their main aim is to sell. Their main aim is not to see if that system will serve you best. Very few of them are genuine. So you have to take the responsibility of due diligence on your hands and ask yourself if it is suitable to your industry, if it will really solve your problem, if it will really be helpful and useful to you. And remember, you are buying these systems. There is a cost implication in it. It will be very sad and it will be very disappointing if a business person, you invest your money to buying these systems and then the system is not being useful to you in your promise or in your business. You'll be doing a disservice. In your overall objective of profit maximization and cost minimization, you shall have already compromised. So before you reach there, sit down, look at these considerations, and choose the best that will really help you to handle your business operations in terms of accountability, reporting, and decision making. Now, there is one aspect that I wanted to mention about general functionality. I asked about the LPO, if you want to use LPO, raw materials management, finished goods, the GRNs, and I brought the aspect of credit notes and debit notes. Now, again, if at all at one point in time, you are running maybe a mini-mart, a supermarket, or a mini-mart, or a wholesale shop, and at one point, you would want to employ the use of barcodes and shelf tags. Barcodes and shelf tags. It has just come to my mind now. Though I know I've already started discussing the second point of industry-specific functionalities, but it has come to mind because I know it is a critical area. When you talk about the barcodes, the barcodes, the barcodes and shelf tags. Remember, when you are dealing with FMCG sector, fast moving consumer goods, where you are running a mini-mart, a wholesale, or any self-service, goods and service industry. And these goods that you are selling, you need to introduce barcodes to them for easy inventory management, for easy stock taking and inventory tracking. Now, this barcode, does your system have the capability to manage the barcodes? You need to ask yourself that. Does it have that capability to manage the barcodes? And when you talk about barcodes, it is a whole new line of discussion. What is the matrix and the format of the barcodes? What is the algorithm? And how do the barcoding of your system play a role in your inventory management? Is it effective? Is it efficient? And what system specifications will it need? Is it within your reach as a business person? You have to look at all those general functionalities that you may need. Now, we started looking at point number 2 about industry-specific functionalities I've just mentioned. Before you approach these salespeople selling to you the accounting systems, ask yourself, what do you need as a person, as a business first? And so that when you approach these people, you already know what you want, so that someone do not sell to you something which you don't need. For them, salespeople, they earn their commission if they sell. So they will not be very much interested in your business well-being, in the accountability aspect of it. They will try to fix their system to convince you how suitable it is and how it will apply to your business. But that might not work well for you if you don't look at various specific functionalities that you need. I gave examples of an e-commerce business. And remember, if you're running an e-commerce business, you need a software or a system that is able to integrate with your e-commerce platform. And it is able to pick the specific functionalities given the area of functionality. Not all systems can be able to do that. They have to be configured and they have to be industry specific to handle that functionality. I gave another example of someone doing website development. When you're doing a website development, your aspect of operation is different from any other industry. You are doing website development projects. You've disintegrated your projects in different stages. You are doing your costing according to the project stages of delivery, given the matrix, or maybe given how you do your staging of development process. What stage do you call what, and what are the cost aspect? What are the charges at every stage? When you come to licensing perspective, how do the hosting of this website that you develop? What are the cost implications of the licensing bit of it? How do you want to manage customer support and things like that? You need a system specific functionality. When you talk about hotel, restaurant, or hospitality industry in general, it is industry specific. Your needs are different from someone who is just running a shop. You need to track down a lot of things that are not normal to other industries. For example, when you run a business, when you run a hotel or a restaurant, let me talk about hotel first. When you're running a hotel, remember you're having accommodation. Are you able to track down the food that you serve to your guests in the rooms? Yeah, I want you to look at it in that perspective so that you get the essence of industry specific functionality. Remember, this is a hotel industry. There is a functionality which is unique to it. You are having accommodation, and these your guests who are in this your room, remember, they are paying your accommodation, for example, 10,000 per night, and you are saying this is bed breakfast for either one person or two people. That's right. Now, in this your bed breakfast, remember the utilities that you are providing to this your guest in that room. You are giving them, for example, some bottles of water, whether you are giving them one each, two each, or whatever number you've decided. You are giving them soap. Let me just call it toiletries. Those utilities. You are giving them toiletry supplies. Now, in terms of accountability, remember, these toiletry supplies, you've bought them, right? There is soap in there is shower gel, there is a shampoo there, maybe you are also giving body lotions in there, and many other things that you can provide in terms of the amenities in the room. And also remember, you are giving them food. You are giving them food. And in our hotel industry, all of us have been to hotels. You might not be working or running a hotel, but you've heard of them. You know very well, some of them, they say it is half board. They say it is full board. Yeah. They say bed only, bed breakfast, and things like that. Now, regardless of the package your customer chooses, are you able to put together and account for the supplies that you give in terms of amenities and in terms of food? And at the end of the day, are you able also to look at the utilities? Are you able to do costing of utilities happening in that your hotel, in that room? Out of the 10,000 you are receiving from your system, remember, you'll be having a point of sale, and you will call it, for example, housekeeping, or you will call it front office system, where you are checking in your guests, right? After you check in these guests, they get into those rooms. You'll record the payment that they've paid and the package they've chosen. And you'll already give a notification to your kitchen department and your restaurant about whatever supplies they need to take to this room. And as the person looking at the financials at the back office, as the accountant or the manager, you need to challenge yourself and ask yourself, for the owner, ask yourself, out of the 10,000 these people are paying, what informed that pricing? Remember, this breakfast being served in this room has a costing aspect of it. There is a way you sell this breakfast to walk-in customers who just come in and give an order of this breakfast. They pay a certain amount, right? And remember now, these people in this room, you are serving them the same breakfast as part of the 10,000 they've paid. Are you able to break down the costing part of it? Are you able to look at how your system handles it? You've charged 10,000, yes. This 10,000 has aspects of, there is water you've supplied to that room. Water belongs to the bar or maybe to the restaurant. You normally sell it also to your customers at a certain cost. Your costing was guided by the profit margins that you worked on before. This 10,000 has room supplies in terms of toiletries. Have you put together all their costings? Right from the point of orders. Remember, point number one, we talked about LTOs and the GRNs. These supplies that you're giving in this room, you must have bought them, right? Is your system giving interconnection? Is your system accounting for their costing when you received them? And then the amount that you are giving to these clients in this room, is your system taking the accountability part of it to break down the 10,000? How are you accounting for it? Again, something to challenge yourself with. The same 10,000 has food. If it is a half board or a full board, you might either provide also breakfast and then lunch or dinner or both. Now, do you break down the charge, the amount that they've paid, to allocate the revenues to the various departments? Remember, this revenue is not only for that room. This revenue takes care of some utility bills in that room. These people are using internet. These people are using hot shower. Hot shower is an element of electricity. If you assume the bigger picture of looking at the capital aspect of it, at least you have to look at the utilities, utility bills, internet, power. And again, remember, don't forget about the person working in that housekeeping department, labor. Are you looking at the costing aspect of it? Are you accounting for all that? Instead of just looking at the 10,000 and seeing that at the end of the day, how much did we sell from rooms? Accommodation gave us 30,000. Wow, this is very good. This is very good. As a boss or as the manager, you're happy you've made 30,000. But you are forgetting this 30,000 has a lot of elements in it. It is not just 30,000 from accommodation. Look at the bigger picture. What is involved if for you to receive the 10,000? What other costing elements have you touched on? Have you affected? There were supplies that you did, that you purchased, you procured. Maybe the invoices are still not paid to date. You are already happy celebrating 30,000 from the accommodation side. Are you looking at the bigger picture? That is a point for you a challenge to you to start thinking about that. This applies to any other industry. If you're running a hospital, you need to look at various aspects of costing. I'm just giving examples here. It is a whole new discussion. I don't want to go too deep into it, but at least I hope you are seeing the challenge. Now, that is industry-specific functionality of a software, of an accounting software. So as a business person, that is a second aspect to consider before deciding on an accounting system to put in place, to involve, to run your business. Whether you already have one, ask yourself if it is breaking down all this process for you. Ask yourself if you are achieving the objective, if it is doing what you expected it to do. As an investor, as a boss, you might also need a specific report. Maybe you need a daily occupancy report. Maybe you need a monthly occupancy report from your accommodation department. Maybe you need to have statistics of your hospital. You need to know how many clients came for consultation to Dr. A. How many clients visited the clinician? How much sales did we get from the pharmacy? And how much profit did we get from the pharmacy department alone? Yeah? What is the productivity level of our nursing department, of our wards? What are the utilities that we used there? What consumables did the nurses use in those wards? What are the returns that we got from the wards? What is the patient statistics? Is our system able to give us a traceability of the statistics of the patients we have in our wards? Are we able to pull out data and see what ailments have we been dealing with with these our patients that we've had for the past 6 months? What are the notorious ailments that we've tackled in 6 months? Are you able to pull out the trend of your customers, your patients, that is, let me call them patients in a hospital setup? Yes, they are customers in a business perspective, but they are patients. Do you have that data? Is your system able to accommodate and have this data so that you can even narrow down and go to an extent of asking yourself, now, from those who've maybe involved in accidents, this is accident and emergency section. Yeah. from this department. Yes, how many patients have we handled for the past 1 month? And out of the handling of these patients, what levels of utilities, what costs have we been able to incur in terms of paying the doctors, paying the emergency units, you know, the emergency response vehicles, the team that are involved, the supplies that they've used? And what is the statistics of the emergencies that we've been having? People coming with broken limbs, people coming with head injuries, people coming with a lot with spinal injuries. Do we have data? Do we have statistics? And from people who've suffered from limb injuries, how many have they been? And what have we been able to realize from this type of patients? That is the data aspect of it. Your system should be able to store and have a breakdown of this data. It helps you to make decisions in the future. As a hospital, when you sit down and maybe you are intending to do some expansion, you need to see from the financials and the data that is happening from all the departments, you are able to see the bigger picture and see, for example, if you realized that you've had an influx of the accident and emergency section, you feel that the team is overwhelmed. You are able to go very fast to your data in your financial system and look at the data, and you'll be able to see actually we've recorded an improvement in revenue from this area. And this revenue that has improved, that means there has been an increased number of accident cases. Now, what are we supposed to do? What decisions can we make regarding this department? Does it need more capacity in terms of employees, in terms of staff, in terms of the amenities that they need to handle these patients effectively? And what is the cost aspect of it? What returns are we expecting? You are doing forecasting of the financial statements. You are forecasting into the future. What are we expecting to get in return? That is at the point of decision making. Ladies and gentlemen, are you getting the level of discussions we are getting into here? It is a lot, right? Good. I want you to think in that direction. Let us go to the third factor to consider before you engage an accounting system. Multi-currency functionality. I think that is self-explanatory. Multi-currency means, is your system able to handle more than one currency? Remember, the world is a global village. You might get foreign clients coming into your premises. They want to pay you in a different currency apart from your local currency. Do you accept that? Most banks, most financial institutions nowadays, they provide their payment machines. You will get the PDQ machines, for example. Some PDQ machines, they run in dollars. The USDs. You are in Kenya, yes. But if you get a foreigner coming into your premise, either a hospital, a shop, a factory, a hotel, a restaurant, or any industry, and then they want to pay you, they have a card with a USD account and they want to swipe and pay you in USD. Is your system able to accommodate such type of a payment? Look at the system that you need and the expectations that you are looking at. It is important to have a flexible system that is able to accommodate multi-currency functionality. At one point or the other, you might need it. And remember, when your system accommodates this mode of payment, there is a greater financial implication. Remember, when you receive that foreign currency, do you quickly think about the exchange rates? Do you quickly think about the exchange rate? And are you looking at your reporting currency? Remember, most of these accounting systems, they report using the home currency. If you're in Kenya here and a client pays you, yes, your system has a multi-currency functionality. Yes, it's okay. Very good. They've paid. And you're very happy that you have a PDQ machine that can be, that can handle a foreign currency. That's so good. And also you have a USD account, right? Very nice. So when they swipe it, it goes to your USD account in the bank, whichever bank you're using. It's very nice. And you're able to trace that money to your bank. That's okay. But then I'm looking at the reporting part. When at the end of that month or at the end of that financial year, when your system is, you are pulling out your financial reports for either auditing or for tabling for decision making as you plan and budget for the new year. Now, how will your system handle that reporting part? Is your system able to work with the exchange rate existing? Or if you have a lot of these foreign currency transactions at different times of the year, what rate does your system pick? Is your system able, what matrix of, what matrix of averaging, how does your system work with the averaging functionality to bring to you a report that works with that with an exchange rate? Does it pick exchange rate at that specific point in time when the transaction happened? Does it work with average exchange rates, and where does it get it from? Which rate are you keying it in manually, and where are you getting the data from? Or is your system able to pick the international running rates at that point in time? And how will that reflect in your financials? And is it accurate? Will it overcast or undercast your sales reports, your revenues? You need to think about that bigger picture. And when your system is helping you to do reconciliations, how does it handle the USD, foreign currency, and home currency accounts? Think about that. If you're already running a system, just ask yourself if that functionality is there and how your system handles it. If you are yet to procure a system, that is something to think about. Good. Let's go to the fourth factor. The fourth factor is cloud-based or desktop-based system. Now, we started that discussion and I started bringing to you these perspectives, but then I feel we need to go deeper. I feel we need to go deeper into that. What do I mean? I feel that we need to look at the major differences between cloud-based and desktop-based accounting systems. I mentioned to you that cloud-based it uses an online portal. Desktop-based is working on a computer that is domiciled in your premises, in your business premise. But then, I think I want to go to an extent where, to give you a very organized breakdown of these two. So let me just rub off this writing which I started giving here, so that I do it in a way that we all understand and we move together with it like that. Good. So now, what are these considerations that we are looking at? And I want you to look at it this way. I want us to come up with very simple differences. I'm not complicating anything here. I want to make it as simple as possible, so that we understand, because understanding is key. Understanding is very important. Now, I want to come up with a table that will give us the differences. On the left column, let me talk about cloud accounting software. Cloud accounting software. And then on the far right, let me talk about desktop accounting software. Accounting software like that. So with that, let me just have a very, very small table here. And this table is going to help us come up with the differences very easily like that. Now, what is the difference between a cloud-based accounting system and a desktop accounting system? They're very simple. We've already talked about them. I'm just putting them in writing for you to understand it better. And before I even do that, I want to look at the aspect of differences. What are the areas of differences? The areas of differences. Under what considerations are we getting the differences? For example, let us look at the difference in terms of payment model. Payment model. What do I mean by payment model? If you want to engage or maybe get to use a cloud accounting software, what do you need in terms of payment? How will you pay for it? In a simple terms, how will you pay for it? Yes, you need that accounting system which is cloud-based. How will you pay for it? It is pay as you go. You subscribe. It is depending on subscription. Pay as you go. Pay as you go. Pay as you go, like that. So you just subscribe, and the subscription mostly depends on number of users. Subscription mostly depends on number of users. It is very flexible. You just tell them that I need a system that can be able to accommodate, for example, 2 users, 10 users, 50 users, 100 users, and then they will invoice you according to your need. Once you pay, it is pay as you go. You pay, you start using the system, right? That is a difference in terms of payment model. What of the desktop accounting software? In a desktop accounting software, you have to pay upfront the license cost, because remember, they are installing this software on your computer, right? Now it is upfront payment for this, for license. And when you talk about license, it's because they're installing it on your desktop, on your computer, either on a laptop or on your desktop at your premises. And they may charge additional costs. They may charge additional cost in case they want to do any upgrades, for upgrades. They might charge additional cost. For example, if you want the system to be reconfigured to accommodate more number of users or something like that, you will have to call them. They will come and do that manual updates, and that might attract some other charges. But for cloud-based accounting software, you subscribe according to your need, according to the number of users that you need, or functionalities and things like that. Let's look at another area of difference. We have looked at payment model. Another area of difference that I would want us to look at is installation and updates. I know I've mentioned it, but then it is also good to bring into perspective to see it clearly, the difference. Now, in a cloud-based accounting software, as I've mentioned before, there is no software to install. You are not required to install any software, because all you need is internet connection, and you are able to access your data and operate your system. No software to install. And when there is no software to install, because this is an online version, updates, because I've talked about installation and updates will always be done remotely by the vendor. Yeah. And these new features that can be added by the vendor or the people, the developers of the system, it will be immediately available to all the users. So I can say instant synchronization of updates. The updates will be synchronized and it will be available instantly to all users. Now, well, let's look at the desktop or the desktop accounting software. What happens to it? Now, this is manual installation. Manual installation. In terms of installation, it has to be installed manually, and manual installation of the software. Remember, it is the software being installed on your computer, either your laptop or your desktop. It has to be installed. And then all other updates are also manual. Updates are also to be done manual. The vendor will have to come to your premise, or they will use any other third-party software to connect to your computer remotely and do the manual upgrade or the updates that are required. They reconfigure the system again. Depending on your agreement at the point of procuring the licensing, they might also charge you something little for that service. Depends with the vendor that you're dealing with. I hope we are together. I hope you're understanding the differences. Now, what is the third aspect of difference? Let me look at the security, because security is very important in terms of data. And according to the current trends, we need to be very careful about security. Now, in terms of cloud-based accounting softwares, one of the considerations before they are given a go-ahead to operate in a country, before they are licensed, with the information authority, they have to achieve certain security measures, so that they guarantee their clients that their data is safe and they can only be used to, for authorized operations, right? So there is control of access. Yeah. Let me talk about access controls. Yeah. So there are access controls that you can always configure in this your cloud-based accounting software. Yeah. And then because this is a remote database that we're using in a cloud-based software, that remote database can only be accessed with authorized personnel with the various security levels that they've been given. And then when you talk about the desktop accounting software, now the company or the premise, your business now, you must ensure you protect your data in terms of software and setting up the credentials to access this computer. Remember, here there is a computer in a desktop version, in a desktop accounting software, either if you're using a laptop or a station computer, that computer has to be protected in terms of access. Because if it can be accessed by unauthorized personnel, then your data is at risk. Yeah. So company, in this case, company to protect their data. You have to protect your data because this is a physical computer stationed at your premise, and therefore it is prone to mishandling. If unauthorized personnel get access to it, in terms of the software, also, you have to protect it on your own. Remember, anyone with the administrative rights on that computer can even delete that software. You're aware of that? Remember, I didn't want to talk about this, but if you get a dishonest accountant or a manager who has done some shoddy deals, and they know very well that the system you're using has all the data of suppliers, has all the data of sales, and has all the data of creditors that are supposed to pay you. And they know very well that maybe the debtors that are supposed to pay you and the creditors that you owe, all that record is in the system. They might, if you get someone who is not very honest and they are able to access the system, and these are unauthorized personnel, someone might go there and interfere with the data that you have. Depending on how the system is configured, someone can say, if there is no proper backup of this data, yeah, someone can say that now there is this data who owed us some money and they've paid us. Maybe the data came and paid in cash, and maybe it is good money, and someone wants to interfere with that record so that you're not able to trace it, or someone is perpetrating some fraudulent activities. What does this person do? If this person has admin rights to this computer, this person can go there and delete it. Remember, from the control panel of that computer, using admin rights, you can be able to uninstall a software, right? We all know that, right? Now, what happens now if you are running a business and someone does that to you? Because now you have a station software in a computer, desktop, or a software, or a laptop. Then someone with admin right goes there and deletes the software. What happens? You've lost all your data. Assuming there was no external backup, it is gone. Or someone goes there and formats that computer. Everything is lost. What happens? I want you to look at it in terms of a business person, an entrepreneur. Where will you start from? Remember, all the data was in there. This is the system that contains the details of all the debtors and all the creditors that you owe. Now, if somebody does that and then tells you that there is this money we are owing to person A, we owe person A 300,000. No, remember, you are now relying on them to give you the figures from their heads, because now you don't have a backup to refer to. You don't have the files. And assuming that the people who are in touch with these clients, they've already even told the clients that in case you're asked to give an invoice to support this your claim, please let the invoice amount be this. This is the figure I'm giving. Remember, fraud is being perpetrated in some of those ways. Yeah. So, in terms of security, desktop accounting software is much prone to such security threats. So, as a firm, if you opt to go for the desktop accounting software, you have to be ready to protect your data yourself, protect the software on your own. But if you're working on a cloud-based accounting software, no one can easily tamper with that information. Any unauthorized personnel cannot access and tamper with it. That data will be safe and protected, and it is under the policy agreement, the license policies from the vendor before you procure their system. You have to agree to these security measures so that they protect your data in their database, because remember, this is a remote database. No one can physically touch it or handle it or maybe interfere with it. It is safe out there. Regardless of whatever happens at your premises, The data is safe somewhere and you can always get it. Even if your premises burn down today, that data is accessible and you can get everything in terms of financials happening at the data that you need. You get that perspective? Very good. Let's go to the next point of difference between a cloud-based accounting software and a desktop-based. Now, accessibility. Very, very important. Very, very important. I want you to look at this very interesting view. Accessibility. How is it a point of difference and how does it concern you? Why is it important for you to look at that accessibility? Now, remember, this cloud-based accounting software, it is accessible over the internet and it is accessible anytime. Anytime. I just want to write these words. Anytime, anywhere. Anytime, anywhere. Yeah? It is accessible anytime, anywhere by any user, so long as the user has credentials to log in from any device. Anytime, anywhere from any device. Let me add that part, from any device. You're able to access. Once you're given access controls, depending on the rights that you have as a user, you can access the system from anywhere. But what of now the desktop version, the software installed on a specific computer? What happens to it? Yeah. Now, in this case, you must access the physical computer. Yeah. Now, because the software is installed on a computer, whether a laptop or a desktop on your premises, now you must have physical access to the computer to operate. You must physically have access to the computer before you can operate it, access the data, or do entries, or get the reports that you need. Any operation that you need to take on that system, you have to be on site. You have to do everything on site. If you'd wish to work remotely, you have to carry away this laptop, carry away. If it is a desktop, you have to load it on your car and then go away with it so that you'll be able to access the data remotely. Yes, you can still access the data remotely, but you'll be walking around with that your computer. If it's a laptop, that laptop, you will be walking away with it so that you'll be able to access the data remotely. But now I'm looking at a situation where you have many other users who want to use the same system. If you go with the laptop away where the software has been installed, how will the other users get to use it? How will they access the data? Are you seeing a technicality there already? That's what we're talking about. Now, make a choice. You choose what you feel best works for you. But the most important thing is you now understand and you now see what are the different areas that you need to consider when you are choosing these softwares. We are continuing with the differences here. What number was it? We've done up to number what? We've done up to, oh, I was not numbering them. So this is 1, 2, 3, 4. We are going to the fifth one. We are going to the fifth difference. And when you talk about the fifth difference there, I wanted to make this line to give it some spacing. Let me see, let me put it here so we are continuing with cloud-based and this other one, we called it what? This other one we said desktop based. It is a continuation. That's why I've started it with some dotted here to show you that we are continuing, and this is point number 6. What area of difference do we also have between these two? We've talked about accessibility, and I've given you the perspective of accessibility. And to add on to that accessibility, let me mention something again. When we talk about accessibility and we say a cloud-based accounting software is accessible anytime, anywhere, from any device, and this includes mobile device. This includes mobile device or tablet. You are not specific. You must not be using a computer. If your system is mobile, having an API, a mobile application on it, Then remember, you are able to access your reports and see the information you need from that your mobile phone. You don't have to go to the premise to be able to access that data. If you are an entrepreneur or a business person, you are on the move, you are doing some other things, but then you are able to see your financial reports from wherever you are. How convenient is that? It is for you to decide which accounting software to employ and what, depending on what works for you. But the good thing is you now know what to consider and you have the knowledge of the points of differences between these two. Now, let's talk about, because we've talked about data security, what do we think about backup and data recovery? In case of a loss, what happens? How does the two systems handle backup and data recovery in case of something that, in case of an eventuality? Now, in a cloud-based system, there is an automatic backup. There is an automatic backup. And this backup normally happens because it is an online software. Whenever you make an entry, a transaction, the database normally synchronizes it and gives an automatic backup so that you can be able, your reports are normally updated real time. So that even if you've been accessing this using your personal computer at home or your mobile device or your tablet, but that your mobile device or computer or a tablet may be stolen or it breaks down, remember, you've not lost your financial data from your business. You are still able to get another device and get to access the same data. You can even walk to a cyber cafe or someone's computer. You can even borrow someone's computer, key in the URL from any browser. You are able to access the online platform, access your data, log in there using your credentials, and then you are able to still access the data. If there is a report you are looking for, you can still get it. Even if you are abroad, you can still access all these reports from anywhere. How interesting is that? But what of now the desktop version? What happens when your system breaks down, your computer breaks down, or the device you've been using is not able to work? You remember, in this case, backups are manual. Backups are manual. What if you've designated somebody who is running the business to normally do backup, but they forgot to do some backup because it is manual, it involves human intervention? What if that person maybe was waiting to do it at some other time, but tragedy strikes before that backup is done? What happens? What happens? Because in a manual way, the backup should be done regularly so that you don't lose any valuable information if that computer breaks down, or if you lose it, or if thieves break in and maybe raid and steal this computer. You don't lose your data. So in that case, you have to make sure you do regular backups. And because backups are manual, it is very risky if it is not done. So if that computer breaks down, it is stolen, or something happens that will render it not usable, and you don't have that backup of that information, you've lost it all. You cannot get it. It is gone. Very sad for a business. Data is important because it keeps you going. It keeps you have a view of what's happening in terms of financials. So choose you now. Choose you now. Choose you now. What works for you best? The ball is on your court. Number 7. What is the point of difference again? I've talked about several things. What else is remaining? Let me see. Good. In terms of financial data, at one point you might need to share data. Sharing data. Who are you sharing it with? With external parties. Who are these external parties? I know you're asking yourself, who are these external parties? Don't worry. Don't worry, we are getting there. Now, sharing data with external parties. Who are these external parties? Now, in a cloud-based accounting software or accounting system, remember you are working on a remote database and operations are centralized. And depending on the access rights of the users, they are able to access this information real time. For example, some of these external parties were, for example, external accountants. You might involve the services of external accountants whom you want to oversee your financials. You want them to be able to maybe give you some custom-made reports, and they are not within your premises. How do they get the financials they need? You don't have to stress yourself asking them, I'm here at the computer in the office. Now tell me which kind of report you need. It might not be very efficient. Now, if you are working on a cloud-based system, the only thing you do is just to give them access. Give them access, give them rights, for example, to view all the reports. Once you've given them rights to view all the reports, they are able to pull out the report that best serves their purpose, the reports that they need, and they will help you do the decision making or whatever task you wanted to be done. It will be done efficiently with minimal effort. It just involves giving them access rights to that system, and that's all. So if you're working with external parties, or you are different bosses, maybe you have CEOs, you have directors of the company, and they need to access some of this data. You can call them third parties because they are not involved directly with the operations of the business, but they need to see this information. You just give them access rights and they can be able to see it. So when talk about sharing data, so I don't know which word is can I use to give a difference here. I've already explained. I hope you've understood. So, now, sharing data is efficient in a cloud-based system, because of that ease of access, and I'm looking for wordings to put in there. Now, accessibility. Accessibility is easy. I know when I talk about accessibility, you might be thinking of another point, but accessibility is easy using access rights. E.g., to external accountants. I hope you understand the wordings. I was looking for the best wordings, and I think that makes sense. Now, what happens on a desktop version, a desktop computer version, accounting software version? Now, this is manual sharing. Manual sharing. And because it is manual sharing, you will have to manually go to the system and manually export the data, i.e., manually export data. And share with external parties. So yes, you can still share the data with external parties, but then you'll have to manually export them. You'll have to know, either you call them to your business so that they identify the type of report they need and the data they need, and then they export it. And then they carry it on some external drive, they share it, and data security is also very key. So you might not want your data to just be shared like that, and it consumes time. It is costly because these people will have to come to your premises. Remember, this is a professional who understands what they want better than you. Maybe you are not even around as the owner. You are just conversing on phone. You have to send that person to your premise to be given access to that computer so that they are able to view through and get the reports that they need. But if you're working on a cloud-based system, it can be done at the tap of a button. Now, we've already seen a lot of differences. Do I still need to go further? I think we've already covered a lot of it, but there is some bit I wanted also to bring on board. In terms of reporting, that is another area of difference. Let me call it number 8, and I want to call it customized reporting. Remember, if you are new in this channel and you've not viewed through some of the videos that I posted before, there is something I mentioned about importance of financial reports and which financial reports are more important and why you need them. Because financial reports do not end at preparation level. They are used for decision making. By who and for and how and what do they look at? There is a breakdown video of that, and if you've not seen it, I encourage you to try to check through the profile, the videos we posted before, and get to see it clearly. So when we talk about customized reporting, now the flexibility of this system so that you can customize the reports that you need, the cloud-based accounting system wins in this area. Yeah, it can be extensively customized in real time, and you are able to export specific reports with specific requirements, and this will always conform to your needs. Yeah, so this is extensive let me talk about which word can I use best to bring out that difference. Let me look at the manual, the physical, the manual accounting system, the desktop-based accounting system. Now, because it is desktop-based and you need customized reporting, yeah, in most cases, most of the desktop versions of these softwares, they have limited selection of financial reports. Yeah, so let me just say limited selection of financial reports. Limited selection of financial reports. So when you talk about limited selection of financial reports, then there is little customization. You can only customize it to a certain level, yeah, before you can export it to either Excel, CSV, or PDF formats. Yes, you will still export and get the reports for analysis, but then there is a level in which there is a level in which cloud-based accounting systems normally give extensive customization. So reports are extensively customized in real-time reporting. And remember, this is all done remotely when you can pull out the reports in real time. And because of the flexibility and to which they are customized, because there are systems that can adopt changes very fast. If maybe the developer wants to reconfigure a certain report to come a certain way, they can do it very fast and it will be synchronized in all the users across platforms, and you are able to get the same in real time. So it beats this desktop version, pants down. I'm just finishing up. Let me mention maybe the last or the second last thing. What else? Remember, we have to connect with what we were discussing. We are looking at the role the accounting systems play in relation to tax compliance, and all of this in relation to how it will reduce your cost in a business. Remember, tax is a cost, tax is an expense, and we are looking at reducing our costs as we maximize our returns. So as a business person, when we look at these functionalities of these systems and the differences between the cloud-based and desktop-based versions of these softwares, we have to look at the compliance part. Very important. Very important. So we ask ourselves, how does a cloud-based system handle compliance? And what are we complying to in any way? What are we complying to? Just ask yourself, what are we complying to here? When we talk about compliance, what is it that we mean? Now remember, it is not just about government regulations or taxes. We also comply to accounting standards. Right? So you have to be very careful there. Now, compliance in a cloud-based accounting system, and it is compliance to generally accepted accounting principles and government regulations. Government regulations, for example, taxes. Yeah. So when we talk about government regulations, now how do these systems compare in terms of how they handle this compliance part of it? Yeah. So now, let me give a difference here. And when we talk about a cloud-based accounting system, there is which term can I use? Let me see if the desktop version, how does the desktop version handle compliance? Now, local compliance updates. I'm picking this from a desktop version of of an accounting software I've used before. I don't want to mention the name of the company because I am not de-selling them, or I'm not promoting or de-promoting their product. That's why I'm not mentioning it. But there is a very interesting an accounting software which is it is world renowned, and they also started with the desktop version before. Nowadays they're using online versions. So I realized that for you to ensure on that desktop version, they don't give you the updates. It is normally not updated according to the changes that happen in terms of regulations, accounting standards, and also government regulations in terms of taxes. Those updates, you will not get them. It is done manually. And if you do not contact the vendor to come and install the updates on your system, and remember, if you are using a software that is adulterated, a software that is not genuine from the company itself, maybe it was cracked. I believe you understand the meaning of the word cracked. If you're using such versions of softwares, you will not be able to get any software updates from the vendor because the vendor is not the one who licensed it. In fact, you're using it illegally. The vendor can even sue you. In such a case, do you expect to get any updates? Do you expect to get any updates from concerning any change in standards, accounting or government regulation standards? The answer is no, right? You also know that, right? So what happens? Any local compliance updates must be implemented manually. And this can cost you because if it is implemented manually and you know very well that this software do not have a genuine license, it is on a desktop version which has been cracked. Remember, you might not be able to reconfigure this software do not belong to you, and the owner, you cannot even contact them to come and do it for you. You see that? So you will be running a software, doing your entries and transactions, but then it is not in compliance with the accounting standards and government regulations in terms of taxes. So what happens? You will be operating with outdated regulations and outdated accounting policies. You will not be running on the updates, right? But when you talk about the cloud-based accounting software, there is instant compliance updates, And if you are in Kenya here today, I want you to relate. You know, the government introduced some regulations affecting housing levy. This one now is talking about the human resource management softwares, the payroll softwares that you have. I'll not mention any name, but you know the payroll softwares. Housing levy, pay as you earn adjustments, and then there is this SHIF or the SHA, the Social Health Authority. Let me call it Social Health Authority. This health insurance thing. Now, you know the regulations that affected this. Again, back then there was also adjustments to do with the personal relief. And also some of the ways in which you can reduce your tax burden as an individual. We mentioned before in a previous discussion, we talked about there has been policies that affect, for example, mortgage interests, affecting maybe pension, how you know pension funds operate and the percentages that accrue to them, any bonus benefits that you receive from employment, the percentages being charged. There's been change of policies over time. And when you are using and cloud-based accounting software or accounting system, whether it is payroll or just an accounting system, they capture these updates real time. Again, accounting policies change. When they change, if you're using a cloud-based system, it is easier to incorporate some of these policy changes instantly, and it will synchronize across all platforms of users, and you are able to handle that easily. So when these changes happened in Kenya, when this housing levy adjustments was done, and you are told now, when the housing levy to be charged, and for example, they were all converted to be allowable expenses. Now, housing levy is allowable. Then NSSF contributions also, they were adjusted, the rates and the charges were adjusted. If you have a desktop version of an accounting system or a payroll system, it might not be able to automatically capture that. You must contact the vendor to come and manually reconfigure your system to capture these changes. Is that very easy? Not very easy in real life situation. But if you're working on a cloud-based system, then these changes can easily be done remotely by the system, you know, the developers or the vendors of the system. They can easily effectively do that, and it will across platforms, all users, because it's an online based thing, it will be synchronized immediately and you'll see the change. It will reflect on your end. But if they have to serve every user manually, they will take a lot of time for them to even reach you, because they have a lot of users and they will be contacting them one by one, going to their premises, reconfiguring. How long will that take? You can view that on your end and see the practicability of that. So that is on compliance to generally accepted accounting principles and government regulations. And when we talk about government regulations, basically we talk about taxes. The last thing, this is the very last, guys, this is the very last difference that I want us to talk about. And the very last difference I want us to talk about is multi-currency. not currency, but multi-entity. Or let me talk about integration. Let me talk about integration. Integration and multi-currency and multi-entity. I want to combine the two together. Then when I talk about integration, you will agree with me, guys, that when you talk about integration, I want to give an example. If you are in Kenya today, you know that our taxman, the Kenya Revenue Authority, has introduced a system or a platform called eTIMS. eTIMS is an online system functionality where you are generating ETR invoices and you are reporting your transactions real time online. And it is interconnecting your system to the KRA database so that you are able to claim your VAT, your input VAT efficiently. And this helps to reduce your tax burden. At the same time, you are able to remit your sales invoices. And depending on how your system handles sales adjustments in terms of the returns and anything that happens around it, the bonuses and all that, that depends on there's a discussion we had before about how your system handles that in the consideration part. Now, we talk about eTIMS. eTIMS need to be integrated using your system that you use, the accounting system you use in your place. Now, if you are working with a cloud-based accounting system, it needs to be able to be integrated easily with eTIMS. So an online or a cloud-based accounting system can be easily integrated with other systems, because they are flexible. And coding of the same can easily be done because most of it is remote. Most of it is cloud-based, right? So there is a real-time view of data across the business. There is a seamless integration. In fact, I needed to use the word seamless integration. Seamless integration. Yeah, it is seamless integration. And it is so easy to integrate cloud-based accounting systems with, for example, eTIMS. Now, if you are a business person in Kenya today, ask yourself, if you're already having an accounting system running, are you able to integrate your accounting system with the eTIMS platform? You'll answer yourself. If you are not able to integrate it, remember, if you are running a cloud-based accounting software and you've not integrated it, reach out to us. We'll help you to see, to run your system on test and see if it can be integrated on eTIMS platform or not. If it cannot be integrated, we'll be able to give you an advice on how to have a system efficiently, pocket-friendly rate to help you run a system that can be integrated and has all these beneficial capabilities. Depending on the industry where you work, it will be custom made to sort out that your issue. Now, what of now the desktop version of this accounting software? There is limited ability. There is limited ability. When I talk about limited ability to integrate, limited ability to integrate. I'm just saying it is difficult to integrate. It is so difficult to integrate a desktop package or a desktop accounting software with other applications. You know the technicalities that are involved. When you want to integrate a desktop version, a computer-based, a computer which is on site, you want to integrate it with the softwares, you have to do manual data transfer. That is the technicality I'm talking about, manual data transfer. Because when you integrate, there is a lot of coding which is done on site. The coding must be done on site, and the reconfiguration is done on site to be able to manually transfer the data and configure it so that it is able to accept to integrate with other applications. So the technicality involved in the desktop version of it can be costly in a business perspective. And as a business person, remember, one of the objectives is to manage your costs and to maximize on your returns. So do you want to make your costing go higher, or do you want to manage it? Now, what do I mean? Now, after discussing all this, then you realize that a cloud-based accounting software overrides and has more benefits, is more beneficial, and with whatever direction technology is taking in this current era, you realize that this cloud-based accounting system is the best bet for you. So guys, today I want us to stop there. We've already looked at a lot of factors there, and we will continue. Please stick here, subscribe, share, follow, because we share a lot of very educative videos and we learn together. Share your ideas. Feel free to comment If you feel there is something that you need to share, please feel free to reach out, comment, share, like, subscribe, and see you in the next one. Thank you.